Hello, everyone, and welcome. Thank you for joining us for today's webinar titled Virtual Foley Launch Workshop, Seed Stage Financing and Entrepreneurship. Before we get started on today's presentation, I'd like to go over a few housekeeping items. For those of you that may have questions about any of today's topics, we invite you to type them into the Q&A widget on your screen at any time. We will do our best to answer all questions during the live program, time permitting. If you experience any technical difficulties with the webinar platform, please refresh your browser or see the webcast help guide on your screen, which is designated with a question mark icon. All speaker bios are available to download in the resource list widget. And as a final note, a short survey will appear on your screen. We would appreciate it if you provided us with feedback on today's webinar to help us improve our webinars in the future. And now I will turn it over to Louis.
Thank you, Claire, and I'm Louis Lehot. Welcome everybody to our webinar, which we are calling Foley Launch. Watch this space as we're curating a number of materials that are both in video format, written format, and otherwise that are designed to accelerate the startup. We are working with a number of companies that are across the life cycle from garage to global. And together with my partner, Nicole Hatcher, we invited a group of Silicon Valley luminaries to help us address the topic of seed stage financing and entrepreneurship in May of 2021. And we're really, really proud to have with us today Brett Waters, Eugene Malabrodsky, Karen Page, and Raymond Liao. And to kick us off, I think, Brett, it would be fantastic if you could introduce yourself quickly.
Awesome. Thanks, Louie, and thanks again for the invitation to be here today. So I'm Brett Waters. I've been in Silicon Valley my entire life. I grew up in Los Gatos. And I've been through the Silicon Valley thing a few times of launching a company, raising capital, being a CEO. And for the last 10 years, I've taught entrepreneurship at Stanford University. And I also coach CEOs at the Miller Center for Social Entrepreneurship. And last year, I launched an accelerator called Fourthly, which is focused on entrepreneurs who are driving the fourth industrial revolution. So glad to be here today.
Thank you, Brett. And I hope you brought some fish tacos for everyone. Eugene, you're up next.
Is that what he's famous for?
He is.
in Louie's mind, yes.
Hi, my name is Eugene Malabrodsky. I'm a general partner at One Way Ventures. We're a venture fund that's focused on investing in immigrant founders to U.S. and Canada, early stage, and we are proud. We're proud of helping a lot of the entrepreneurs that come to the U.S. or that weren't born here to help them succeed in their dreams. Prior to that, I was a founder of a successful startup called Anchor-Free that was in the consumer internet security and privacy space. And our company has touched over 900 million people globally, and really proud of what we have done for the society and the world that utilize our products.
Thank you, Eugene. Karen, please introduce yourself.
Hi, I'm Karen Page. I'm a general partner at B Capital Group. We're a multi-billion-dollar, multi-stage fund that is global in nature, founded by Eduardo Saverin, who founded Facebook, Raj Ganguly, and Howard Morgan about 6 years ago. And I have focused over time in the growth fund. I'm currently focused on our early stage fund, previously an operator at Box and Apple. It's great to be here today.
Thank you, Karen. And Raymond Liao, not last but not least. Raymond, introduce yourself.
Thank you, Louis. This is Raymond Liao. I'm one of the managing directors at Samsung Next Ventures. So we are one of the venture investment team for the Samsung Electronics, focused on software and service innovation. In the past, we are making investment at the pace of one deal per month, typical, CVC. But starting this year, we are expanding to make, we plan to make about 50 investment at the seed stage. So this topic today is very relevant to us. We do see the opportunity to grow at the seed stage.
Thank you, Raymond. And I'm not sure if my partner, Nicole Hatcher, was able to connect. We're having some logistical issues. Nicole, are you there?
I am here. Can you hear me okay?
Now we can hear you. Can't see you, but we can hear you. So please introduce yourself, Nicole.
Yes, thank you, Louis. So I'm Nicole Hatcher, a partner in Foley's Northern California offices in the corporate transactions group, and a lot of my clients are going through early stage financing. So we get them from inception all the way to exit, and right now have a lot of early stage clients who I think would be very interested in the topics that we're discussing here today.
Thank you, Nicole. And I've been working with Nicole and this new team of lawyers here at Foley for the last, better part of the last 10 years. And some people have asked me why Foley, and I look at this On24 webinar software and I say it's because of this team and the support. So thanks to everyone at Foley who's helped us put this together. To put everything in context, we're in May of 2021, and if you can look at the screen and see me, I'm in an empty office where as I joined Foley in the middle of the pandemic, like most people, very rarely come into the office and no one's here. And that's the state of Silicon Valley today. And that's the situation that we're all in. Counterintuitively, I never would have guessed that in this environment, we would be back in some super 1999 market conditions. And in the first quarter of 2020, we had more venture financings than at any time in the history of the world. In April 2021, we launched more unicorns and more decacorns than at any time in the history of the world. And Silicon Valley and San Francisco are the epicenter of 40% of those dollars. So it's a pretty incredible time to be here, the best of times and the worst of times. And today we really wanted to talk about seed stage financing, as that's where we feel like we can really bring the most value and where people need the most help, and it's really at the most critical time. And so with that, I wanted to kind of set the stage about what we're talking about and why. And 10 years ago, we talked about financing in terms of Series A and Series B, and the word seed really meant your initial first dollars in the door. Today, that is not at all the case. Seed stage has become a very sophisticated, segmented market, and it's maybe the second or third round of capital that comes into your company. Today, if you have an idea, you're very unlikely to raise seed capital or talk to a venture capital firm unless you're a repeat entrepreneur who's got a lock and load business plan and investors. So most of the time, initial capital, your first dollars in the door, are going to be to create a minimum viable product. It's going to be friends and family money, maybe a business angel, if you're lucky, a super angel, and that will bring you to some sort of a minimum viable product with which you can then begin the process of proving that your product or your idea has a consumer, has a market. There's a fit between the problem and the solution. And then and only then can you go and talk about having what we call a pre-seed round of financing, where you say to folks, hey, I think I've got something. I'd like to go prove a product market fit. And then you're going to talk to some sort of micro seed funds or business angels to raise what we call a pre-seed. And then after you've got some semblance of product market fit, then maybe you would talk to seed funds of the kind that we've got on today's call. And I challenge Eugene, Raymond, and Karen to agree with me or disagree with me that that's when they first want to meet companies. Eugene, maybe I'll start with you because I can see your face on the screen. You're my first victim. Eugene, tell me when you and your partners at One Way first want to meet companies.
So we tend to start meeting with the companies in two stages. One would be when they just raise their pre-seed, or maybe they're raising pre-seed, so we start the relationship. Sometimes we put in like a small check in their pre-seed round. where, and it's only when we feel that if this company is going to do great, we are interested in leading their seed round. And the seed round, if we don't do it, we might not get an opportunity to invest in their seed round. That's usually when we start the relationship, or we get introduction when the company is about to start raising their seed round.
Raymond, tell me, when do you first want to meet a company? At what stage of growth?
I would say as early as they are ready. We are writing checks at the pre-seed and the seed stage, right? These days, right? And I said we're going to make 50 investments this year in that segment. Okay, because our mission now, which adjust our mission is actually we want to work with the best builders. We see there's actually a big shift of the the maker community, especially the creator economy. So we want to see those founders. We want to look into their teams, and if they understand the problems better than anyone else, we are willing to bet on them.
That's awesome. And Raymond, you have been in the Valley a long time, and you've been investing with Samsung for as long as I can remember. I'd love to hear from you as to how Samsung Next and Samsung's venture initiative has evolved. And for those of you who are not aware, Samsung has a number of corporate venturing groups, of which Samsung Next forms a part. And corporate venture is a really important part of the venture ecosystem. And Raymond, I'd love to have you kind of share a little bit about your journey in corporate venturing, and then maybe how Samsung Next has evolved.
That's right. I think what we are doing actually is very difficult to for any corporate venture team to do at the beginning, right? We have been doing this for the past. The team has been around for the past not more than 8 years. I was at the beginning with the same team, and we evolved quite a bit. In the early years, we make very, very few investments because of the decision on autonomy is not completely with the fund. So over the years, we gain more autonomy, but still deploy capital at a careful pace of one deal per month, right? But starting this year, we have the new leader for Samsung Next, David Lee. He came on board to lead the whole Samsung Next. You people know him. He came from SV Angels. So he actually convinced the senior leadership at Samsung to say, okay, Samsung has to engage with the ecosystem in a very different way. Because of the reason I just mentioned, right? Because the entrepreneurs, the maker, the creator economy is changing. Okay, at least we as this one of the a few Samsung investment team has to evolve. So basically, he convinced the senior leadership to give us the total decision autonomy to do what we are doing today. So basically, we can make a decision within a few hours, or up to a few days. So we can be faster usually than the deal closing.
That's incredible, and it's a revolution in corporate venture to have a pool of capital that can be deployed that quickly, with decisions made that quickly, and it really should challenge the way everyone thinks about Samsung, rather than a Korean chaebol that would take a long time to get a decision out of, and that would require trans-Pacific travel. You're now going to get a decision within hours or days, and you can have a check move very quickly. So I think that's fantastic news for the community. And Raymond, thanks for joining. Karen, would love to hear from you about when you like to meet companies, and how do you define seed stage?
Yeah, I really think that it has changed quite a bit. If I think back to my days at Box, when we raised our A round, it was only $6 million. It was much more like a traditional seed today. And certainly that's where we've seen the market go. Pre-seed was not a thing a few years ago. Seed is now, I think, the most interesting time to get a look at a company. Certainly if I can meet them in the months preceding their seed raise, I'd be super happy about that. But But generally, we want to meet companies as soon as they're ready to talk to us. We like to form those relationships early. We like to be ready to write a check, like Raymond said, in a matter of days, if that's what the entrepreneur needs, if that's what the competitive situation requires. And we are often in a position to do just that, given the current state of the market, which we feel is rather competitive, but super, super interesting, whether it's a result of COVID or just the natural trend line that's occurring. It is a very interesting time to be looking at seed stage entrepreneurs.
Karen, what's the best way to connect with you?
Oh, gosh. Well, I personally have found Twitter to be super interesting these days. A lot of folks just putting out there that they're willing to talk to founders, or, who's got a great company they want to share, and that sort of thing. So I've actually found some interesting companies through just reading through Twitter and sourcing that way. Generally, the way that I find companies is through my network and through, Howard Morgan is an iconic early stage investor. His network is pretty incredible. So oftentimes I'm just getting folks who reach out via my network of relationships.
And I would love to hear, Karen, a little bit more about your story about how you came to B Capital and where B Capital sits in the seed ecosystem.
Right. It's the right question to ask. I mean, I am a very atypical investor. I came from years and years of operating. When I was at Box and at Apple, I was in charge of the commercial channel, the go-to-market side of the business, figuring out how to help people sell things to other companies. And, of course, that actually becomes a big strength in the venture space, because that's exactly what we're trying to do, is help our companies to figure out what their go-to-market approach is, whether they should be doing partnerships or channel or both, how to build out their marketing teams and strategies around expansion. So a lot of the experiences that I've had during my career have paid off quite nicely as an investor. B Capital was reasonably new when I joined. It was about 3.5 years old, and in that time, we only had about $360 million under management. Today, we're well over $2 billion, and so the growth has been quite startup-like, which I also was extremely interested and intrigued by. So, helping to build B Capital out in the same way that I've helped grow companies has been quite enjoyable. And we are in the process of moving our approach from growth and late stage to also include an early stage approach. And as I mentioned, that's what I've been spending most of my time on with two partners and an expanding team, looking at pre-seed when we've known the entrepreneur for a while or have seen the entrepreneur's previous successes, to seed and well into the A range, which carries through then to our growth fund. We'd like to invest early and stay with the company all the way through their life cycle to an exit, whether that's an IPO or an M&A type of a deal.
That's fabulous. And Karen, for those that don't know, can you explain what B and B Capital means?
So we are partnered very closely with the Boston Consulting Group, and it's not quite obvious, and we certainly don't play it up very much, but B Capital Group is also BCG, so there is a connection between the two. While we are not a corporate investor, we are partnered with them with the idea that bringing together the strategic insights as well as the client base of the Boston Consulting Group is a massive value add to the companies that we work with. It also helps us in our diligence, in particular in areas where we're looking for the deepest expertise that we can find in the market. So BCG has been an incredibly compelling partner to us as we've scaled and grown, and we constantly look for ways to bring them in to work with our companies as well as into our ecosystem. So they're a great partner. So that's where the B comes from.
And tell us how it's different from BCG DV, or Digital Ventures, which many of you have heard of.
Yeah, the Digital Ventures Group is all about looking for the greatest new technologies and how to bring them into the fold of the broader BCG environment. They are less about investing. We are more about investing. So we do partner with them in particular as well. So
they're more like an incubator.
That's probably a good way to describe it.
Okay, awesome. So thank you so much, everybody, for giving us a little overview of your funds and how to connect with you. I want to bring back into the fold my good friend, Brett Waters, and not because of his love for fish tacos, but because he launched an accelerator at the beginning of COVID called Fourthly, which is designed to help coach companies to get them ready. And what I find when I meet startups, because I think accelerators and lawyers are sometimes the first line of advisors that come to meet with startups, is that they need three things. They need a legal structure, they need capital, and then they need a finance function. And with those three things, I think they can be launched and get on the road to success. And Brett, I'd love to hear from you about what is the appropriate time to join Fourthly or another accelerator and how you sit in the ecosystem. Brett?
Yeah, thanks, Louis. So, so honestly, Fourthly was kind of a COVID thing that last spring, like a lot of people, I had trips all over the world planned. Most of them were speaking gigs, and my wife was going to tag along because we recently became empty nesters, and it sounded like fun. And then COVID hit, and all of my speaking engagements got canceled. And so I thought to myself, you know what? I've always thought about doing an accelerator. And now's the right time because I'll just do it on Zoom because everything's on Zoom now. And in particular, part of the idea is I think one of the interesting things about right now, the World Economic Forum says we're entering the fourth industrial revolution. And one of the things that makes this industrial revolution different from the previous three is that it's very decentralized, right? It's happening all over the world. Whereas, the last 40 years, Silicon Valley has been the center of everything, center of the IT revolution. But today, you've got centers of innovation and centers of entrepreneurship in Austin and in New York and in Tel Aviv and in Berlin and in London, in Florianopolis, Brazil. So there's clusters of innovation, clusters of entrepreneurship, and clusters of capital all over the world today. And so, I thought that's a pretty good kind of driver for doing an accelerator that is Zoom-based rather than, having to be Silicon Valley residence-based. Did I answer your question or not, Louis? I'm sorry.
Oh, no, that's a great start. And I think that you, like me, often get the question, and people probably try and engage with you like they try and engage with me so that they can get introduced to somebody like Karen or Eugene or Raymond. And, when somebody approaches me and asks me for that, I turn it around and ask them, are you ready? And Brett, I'd love to hear from you.
Yeah, this is a great topic.
What do you think it requires to be ready for an introduction to Eugene, Raymond, or Karen?
Right. Yeah. So I'll start by saying that, one of the most common questions I get, and certainly in my work at teaching young entrepreneurs at Stanford, is how do I meet an investor, right? That's, all the young people want to know is how do I meet an investor? Just tell me how. And, the reality is, as Karen said, that usually those introductions happen organically. They happen through social networks. I've raised a fair amount of capital in my career, and I think every investor I've ever had is somebody I either knew socially or was introduced to me by somebody I knew socially. That's the reality of how it happens. And so when people ask me, how do I find an investor? I always say, just get out there, meet people, network with people, and ask for introductions. So that's one part of the answer to your question. And then the other part of your question had to do with what do you do to get ready? So in a nutshell, I think, and of course the investors on the call can jump in on this, but I think ultimately you want to see proof of market demand, right? That everybody's got a great idea. The question is, which ones can execute and which ones have demonstrated some sort of empirical proof of market demand. And so, the best way to prove market demand is to have a million paying customers, right? That would be the best proof. But for most people, we're not there yet. We don't yet have a million paying customers. So what can we have that are kind of proxies for that? So, Can we show a lot of user growth? Can we show that we have LOIs from major companies saying that they will buy this when it's ready? Do we have a waiting list of people wanting to join the beta? All of those things might be indicators of market demand. Because everybody's going to walk in and say to an investor, this is an awesome idea, and everybody's going to want to be a customer. But what an investor is looking for is some sort of empirical proof of that.
Right. So I want to remind everybody in the audience that we have a Q&A function. It is the most fun on these things if you can all jump in with questions. And I'm going to remind my fellow panelists that they should jump in and disagree with each other. The more disagreeing, the better. And with that, I'm going to ask Eugene to comment on the current market conditions. So as I set the stage at the beginning of this talk about why I'm in an empty office and we're seeing more financings than we've ever seen before. Eugene, as a seed stage investor, what do you think about those valuations? How does it impact your investing strategy over the next 3 to 6 months, if one can dare look out that far? And what do you think is coming next in the market? Eugene?
It seems like the current market condition is more in favor of founders rather than venture capital, because the valuations that we see are a lot higher. I mean, we've seen YC valuations on the seed reach 100 million on some of the companies with no customers yet, only LOIs, which is impressive. At the same time, there is a lot of companies that did their IPOs, SPACs, or something similar to that. And so there's a lot of liquidity out there that needs to be invested. And for diversification, that's why NFT and crypto and all other different aspects of investment became hot, is because there's so much capital available, and that capital just drives the prices for everything up, including startups that are raising money. At the same time, one of the big, I think, things that happened over this pandemic is the fact that you have all these people out of Google's, Facebook's, Uber's, and so on, working from home. And they're not only working at Google, Facebook, and so on, but they're actually doing their startups at the same time, which is, I think, one of the other aspects that started coming up, because we see a huge influx of startups that are in the pre-seed, seed stage that started basically over this 1 year period. So there's a push definitely on the prices, on the pricing of rounds, and all VCs have had multiple exits. We had a few exits ourselves, and also multiple up rounds over last year. One of our companies had 3 rounds of financing over the past year, where the investors came to them and said, hey, we love what you guys are doing. Here's a term sheet. And the terms are very fluffy. But the question is, how long is this going to last? And we currently don't have an answer. I don't know if somebody does. Would love to hear their thoughts. But currently, the market is very competitive for the right teams and the right ideas and startups.
How do you think about valuation, Eugene? Not to put you on the spot, and I am, and feel free to deflect. But we often see that 10x multiple of recurring revenues is some sort of evaluation metric. And at seed stage, oftentimes companies are pre-revenue. They've come to you with some evidence of product market fit, but there is no revenue. And so that one's out the window. And that's not even a fair valuation metric for many companies. So how do you do it? How do you think about it?
So we tend to look at 2 things. One is total addressable market, TAM. What's the problem they're solving? How much market can they actually get? And obviously, what does the founding team look like? Because when you invest in pre-seed or seed, it's actually more about the actual team than about the actual product necessarily. Yes, the product needs to be there, but it's probably going to have iterations of the product multiple times before they get it right. And this is understandable. So it's all about the team. Do they have a proven track record? We look also at what advisors were they able to attract to their company. Are those the type of advisors that are advising 100 companies and they're less valuable? But if it's advisor that maybe advised 1 or 2 companies and he is a leader in the space, if you were able to sell him on your vision idea and he's actually helping, and better yet, if he even wrote a small check, that's a huge differentiator for a startup.
Well said.
But
well said.
For us, the valuation is all about the percentage of a company, right? So we tend to want between 5 and 10% of the, at least 5 and 10% of the company was our check. So if the valuation is high and our maximum check is 1.5 to 2 million, and we cannot get 10%, then it's not something that we really like.
I'm going to tweet
I think
that.
This is a really key. I was going to say this is a really key point I think Eugene just made, which is that. So people get hung up on the valuation, right? That's kind of become the number. Everybody wants the number, but really, the days are gone when the valuation was rooted in something logical. So it's really, as Eugene said, mostly it's these days is driven by what percentage of the company does the investor want to own and what percentage of the company does the entrepreneur want to give up. And from that, you can kind of back into a valuation, but it's the percentage ownership that drives the discussion, really.
I mean, we want our pro rata, have an ability to have a pro rata right. And if we can have a more than a regular pro rata, but get a super pro rata if we're the first one check in. So, but usually less than 5% don't get pro rata, right? So,
right. I'm going to tweet that. One-way ventures, super pro rata rights. You got it, Eugene. Raymond, tell me, what are the areas of investment that you and your partners at Samsung Ventures are looking at most closely?
Come on, Louis. It's not Samsung Ventures, Samsung Next Venture. Or the next one.
Sorry. Samsung Ventures.
All right. Joke aside. Yeah, I mean, naturally, because of the huge coverage of Samsung's business, right? So we have 6 focus sectors. Okay, 6. Maybe too many, but I think that's how we start with, right? 3 technology sectors: AI, blockchain, and infrastructure, like edge cloud. And then 3 industrial focus sectors: digital health, media tech, and fintech. See, very broad.
And tell me, what is your answer to the whole question about valuation and what percentage of the company you need to be getting? What are your conditions?
I have no condition. That's why how we play the game in an unfair way, right? We say, okay, we write small checks. We can fit into any cap table. We have no string attached. We don't ask for anything. In the old days, I ask for information rights at least, right? In the new days, I don't ask for anything. So that's our new strategy. I think it's fairly effective.
But you don't lead.
I don't lead.
You don't lead.
Yeah, I do not lead.
Exactly.
Right.
So they need somebody like us or B Capital to come in.
Exactly. Right. So that's why I'm super friendly with all the VCs, right? Is that because I'm not competitive. So that basically enabled me to get into any deals, because I basically just give you additional, option.
Got it. And tell me, what kind of relationship with the Samsung business units can you offer in the current iteration of Samsung Next? It used to be that if you received investment capital from Samsung, you also would have some sort of commercial relationship. Is that still the case, and is that still the goal?
Used to be a goal, so we're gonna work together for that goal, right? it is still a goal, but it's a more long-term goal. The lessons we learned over the past, several years is that it's very hard for you to force a marriage between our portfolio company and a big, business unit inside Samsung, right? So rather than taking a push approach, I would rather prefer a pull approach. I would rather, let my, portfolio company grow healthy. We have a big platform team to help them, not just to look for a customer inside Samsung, but outside Samsung as well. Okay, and then when our portfolio company grow up, then I bet our business unit will come to us, then ask for introduction. Yeah, so I think that's the sort of a new approach we're taking. We will for sure, put the LM in front of the executives when the timing is right. Say, okay, this company has been doing these great things. Okay, that's it. The newsletter will circulate through the whole top executives of Samsung Electronics. So we do that all the time. But we do not really push our portfolio company to work with certain business unit. We let them come to us.
Thank you, Raymond. Karen, I would love to hear from you as to your thoughts on the current market conditions, valuations, and what you're looking to get when you write a check.
Well, I think it's more like what we're willing to give than what we're looking to receive. I mean, honestly,
well said. Cocktail for you.
Thank you. So, we really want to be the most valuable investor on the cap table for any company that we work with. And to that end, we bring in hopefully pretty strong investor talent, but we also bring in a platform team who's able to add value in a number of different ways. But you're right, it's an incredibly competitive market right now. So what can we do to differentiate ourselves? We want to put our best foot forward in every occasion, and happy to work with other investors as well. But ideally, what we're bringing to the table is knowledge of the industries that we're working with and the ability to make connections and to draw from our expertise to, like I said, add value to the company as they begin to scale. We are looking for companies, as I mentioned, in kind of the seed and A. In some respects, we like, it's the same kind of math equation that we were talking about earlier. And in that, we want to get, at least 6 to 10% ownership of a company when we're writing a check. We want to stay with the company throughout their journey. But I hate the thought that we have to be promised rights, pro rata rights. I mean, of course we want them, but we'd like to earn the right. I think that at the end of the day, the relationship that you build with the founders will dictate your opportunities as the company grows and scales. We want to earn that right. I think it's one of the things that we look for as we're thinking about our investment is the founding team. Of course, obviously that's going to be an important thing to us, but we want the narrative. We want to understand what's the story. Certainly the other elements that have already been mentioned are key to our thought process and our decision making. Is there a market, or if there isn't a market, should there be a market? And what are the problems that companies are facing right now without this particular solution? And to us, it's all about hearing how the team is able to articulate their vision around this and the ability to demonstrate that. I think, as Brett was saying earlier, that there is interest in the markets that are being pursued.
Well said. And Karen, thank you so much. Nicole, I want to bring you back in. Hopefully your connectivity issues have been resolved. And we've heard a lot from the funds about what they're looking for in terms of technologies and stages and so forth. And Nicole, you and I work with more companies than we would want anyone to ever know, and we love each of them. And as they embark upon a seed stage financing process, what I always worry about is that I've seen too many of them take too long, and it's such a distraction. And so what I am trying to do is design a process that allows for speed, efficiency, and success. And I would love to hear your thoughts on financing instruments as kind of one of the initial gating items to set up a process. At seed stage, should we be telling our companies to think about a SAFE, a convertible note, a priced round, a preferred stock? Where do you start and where do you end up, Nicole?
Yeah, I think the first question that I ask a client who's wondering that same thing is how much are they looking to raise? If they're looking to raise, I'd say less than 2 to 3 million. I try to steer them towards safes. They're really easy to execute really quickly and get a bit of money in the door without spending a ton of legal fees and a ton of time. And a ton of time negotiating too, right? So it's really easy to sort of execute on safes. If you're looking to raise more than that, then we start getting into, I would say, priced round territory where if you have a lead investor, they're going to want more than what a safe can give them. And then it depends on how early the company is just in terms of revenue, what they want their next financing to look like. So when we look at the current financing, we have to look at the next one and set them up for success for their next round, right? So we don't just look at what we're doing now. So if they're thinking between a seed and an A, I like to sort of draw out of them, well, what will your next round look like? Will you look like a B company in 18 to 24 months, or will you still be on the earlier side? Because we don't want to get into a situation where we've convinced somebody to give us an A round and now we don't look like a B company and it's harder to raise the next round of financing. So
this is terrific. So start with a safe if it's less than 2 to 3 million.
Yeah.
There are kind of 4 key decisions to make in a safe. One is there a discount or not, and what is it? 2 is there a cap on valuation, and what is it? 3, is there both a discount and a cap? And in this market, I'm seeing less of those. And then I think there are a number of other decisions that I put in other buckets, such as will there be a side letter with super pro rata rights that Eugene's looking for? Are there any other kind of key decisions that need to be made?
I'm only looking for super pro rata rights when we cannot put our full check in, so we could get that ownership later on. Because let's say the round was oversubscribed. We usually
Eugene, I'm thinking on you, but I think it's the best form of flattery to any portfolio company when the existing investors want more. So I apologize. I was really just picking on you for fun. But when you have made those decisions, are any other decisions on the financing instrument, Nicole?
No, but I do think those are the main ones. But I do think pro rata rights are really important because I think, especially early stage founders, they tend to give them out, really easily, not understanding how it will impact their next round. So I think really thinking through pro rata rights is important for founders.
What sort of marketing documents do we need to have ready to launch what I call this high resolution process? And it used to be that we'd send people out on a mission to have 100 cups of coffee, which would take months. And it would take months to get people introduced and in front of Raymond or Eugene or Karen. And one of the bizarre advantages of the current environment is that it's very easy to get connected. And not to speak directly about Eugene, Raymond, or Karen's calendars, but I'm finding that it's a lot quicker and easier to get on people's calendars because everybody is generally stuck at home or in a short radius around home and pretty much connected all the time, and really a lot more efficient. So what are the marketing documents that we need, Nicole, in order to have a really high resolution experience, meaning it's fast, it's efficient, and it ends up in success?
Yeah. So usually, obviously, a pitch deck that's been looked at that looks really good. Most of our clients use Document to send around their pitch deck because it gives them some data as to what parts of the pitch deck people are looking at and spending their time on, which means what parts of the pitch deck are important to investors. And so most of our clients have that, or they work with some sort of advisor on putting that together, and they shoot those out to their network. And so that's the main marketing tool that my clients use. But interested to hear, Louis, if your clients use something in addition to just sort of the old school pitch deck and using their network.
Yeah, no, I find that it's really important, and Eugene's firm has a fabulous Medium post on how to get introduced to an investor. I think it's Eugene, it's your partner Setyan who's written this, and I recommend it, and I'll send it around in the materials afterwards. But it's something that's really tailored for the investor, and it's designed to make them think, why do I need to look at this deck, and why should I personally be interested in this, and why is it a good fit for me? And so I find that part of the process of setting up a high resolution process is making sure that you're identifying, contacting, and moving the right funding sources through a funnel. And so my process typically is that I'll identify 5 or 6 sub verticals of market segments to go look at in a commercial database that I have a subscription to, and I'll target that further by geography and stage of growth. And then I'll pull down a spreadsheet of investors that appear to be very targeted, and then I'll look at who are the names of the partners, and I'll sit with the entrepreneur and I'll say, how can we get connected to Karen? And Karen was very kind and invites all comers, but I think the most impactful introduction to Karen would be through somebody that she has already funded. So a CEO of one of her portfolio companies. Now, bonus points if it's the CEO of a portfolio company that has already returned capital and gain to B Capital for Karen. I think that's super bonus. And then super bonus it is if you can circle any other areas of professional or personal interest that you share in common, so that your introduction is super targeted, and that it cannot just sit there and go into the spam filter, or worse yet, just doesn't get a response. Sometimes the most valuable responses that we get in this high resolution process are rejections, where people say why. And so I find those are super informative. If an investor says, well, your market size looks too small, and then I can go back to the drawing board and say, did I really define it as small as I did in the deck? Can I look at it in a different way, or am I targeting the wrong investor? And it's a really important exercise. And so, in a nutshell, in the last few minutes, we've talked about how to design a high resolution process for seed stage financing, so that you begin it, you conduct it, and hopefully you finish it within a short, limited period of time. And that used to be 6 months in a pre-COVID world. And I'm finding that in the COVID world, it can go much, much faster if it's well designed. And what you really want to avoid as an entrepreneur is embarking on this never-ending process where you're always sort of wondering, am I raising money, or am I focused on my product, or am I doing both, and how can I do one without the other? And so if you can design this really thoughtful process, get to the right investors, raise capital, you then can end that process and go back to focusing on your product. So that's the advice that I wanted to impart to the community here that's with us today. And I think there were over 300 of you that signed up, and 100 of you that I see are here, and I'm really proud of that. And I'm going to start looking to the Q&A as we go. Typically, I try and pipe up when they're directly relevant to what we're talking about. Otherwise, I reserve it to the end. But before I do that, I just want to talk about closing. We typically want to get to a closing where the round is complete. We usually have some number of days after the closing, if you will, to have subsequent closings, 30, 60, 90 days, that can vary before we talk about a new valuation. And then typically there is going to be a more formalized board process. When you're raising angel financing, even business angels or micro-seed funds, they're not often wanting to sit on your board or have a formal board process. They can just have a personal relationship with you and give you advice. But when you raise seed capital, I find that that's probably the first time that you create a formal board, and you need to have formal, regularly scheduled board meetings. And that's something that I spend a lot of time with my clients, getting a process set up that fits your industry, your stage of growth, and your base, so that you can really get the best advice out of your founders investors, the best advice out of your investors, and the best traction with them. So if you think about building a relationship with Raymond, he opens the door to one of the biggest electronics companies in the world, and if you can find a way to get regular, meaningful time with him in a way that works for him, well, then that's going to be to your company's advantage. Similarly, if you're a business that can benefit from BCG and you build a relationship with Karen, and she can unlock the keys to that value, it's really going to distinguish you. And I've never seen a founder investor with such a great network of deep tech talent than Eugene. That's just one of the many value points that I see him bring to his portfolio companies, is this network of talent and engineers. And if you can figure out a way to get a regular cadence of meetings with Eugene as your investor, you're gonna benefit from those things. So those are some of the things I hoped that we covered, and I think we've gone over the list of topics. So I'm going to hit the Q&A button right now, and Carlos Candelaro's asked how the pandemic has impacted the process of raising seed capital. And he says very smartly, how is the end of the pandemic going to affect the process? And I think, Eugene, you might have some thoughts to share.
Sure. So in the beginning of the pandemic, we have a few companies in our portfolio that were raising their Series A that got term sheets. And then when everything shut down, the investors got scared and pulled those term sheets, which is not a very nice thing to do, but that was kind of the time which these companies, we helped them find alternative investment and help them extend their rounds. But in a few months after, we saw that a lot of the investors came back to the table and started writing checks. And if I believe that currently it's fairly easy to get access to the VCs and to present your company. Just like Louis said, most of them are working from home and are not traveling, so there's more time. But at the same time, we do get a lot of inbounds that we have to go through, or our team has to go through. In the end of the pandemic, I think some of the VCs are going to take some time off and actually fly somewhere, but we'll see. So it might slow down a little bit.
I think you're right. I think it's going to slow things down. Karen and Raymond, how do you see the end of the pandemic, or do you see an end of the pandemic? I'm not sure that I do see an end. I think I see, here in Silicon Valley, we are still, I would say, 75% lockdown. Most restaurant eating happens outside rather than inside, and it's very, very few people are going into the office. Offices are generally closed. People are talking about July or September or January of next year. So the opening seems like it's slow, and I guess that's my first response, Carlos. But Karen, once folks are going back into the office, and I don't know if you think that that's going to have a big impact. How do you see the fundraising process changing? Karen, are you there? I'm going to flip that over to Raymond.
Oh, sorry about that. That was my bad. I think it's the question of the year. What's going to happen over the next couple of months? We hope that there was a lag in companies being founded due to the pandemic. In other words, they had more time on their hands, as Brett did, and decided it was a good time to get something started. So we hope that same lag will carry us into the months following, quote unquote, the end of the pandemic, so that there is a continued influx of new companies and new founders, and we know that there's capital to go around. So looking forward to lots of new ideas as the transition continues. I personally am vaccinated and heading back out onto the road. I'm doing a little road show to Austin, Texas, and to Miami, because I think there's something that says, like, if you haven't yet been to Miami, you're not a real VC. I'm not sure, but I'm going to make that road trip and find out. I'll let you know.
It's
Karen,
a
I have
FOMO.
this theory that all the VCs there just moved there for tax purposes, but none of the startups did. But I don't know. Please tell me please write me a postcard old school, and I mean old school, one that goes in the post. Raymond, how do you see the end of the pandemic, or do you?
I do see a slow transition. But I'm also, at the same time, I'm also wondering about, the bubble burst. That may happen, my thinking is probably in the next 1 year, sometime there. So that's where I, overlap with the end of pandemics, right? And I think as a VC, personally, I was thinking about, okay, I will spend less time traveling because I just realized how much time I wasted on traveling, right? So probably less, but only attend, a few, much less, individual meetings because we can do this virtually. Okay, that's more efficient. So I would sort of, as entrepreneurs, I would say, okay, pay attention to the macroeconomics, to the market condition, but do have confidence. In a lot of industries, they are going through, this digital transition because of pandemic. That's gonna be long-lasting. Yeah. So have confidence in what you are doing, but think about timing as well.
Great question. Nicole, I'm going to send you a softball here. Robert Fennell, hi Robert, good to see you, my friend, asks, what landmines do you see early stage companies step on during execution of our high resolution plan? And I think this is a softball for you to share just 2 or 3 funny war stories of well-executed plans gone wrong because of a legal problem.
Yes, my favorite kind of stories. So I think the most I think landmine that I've seen in the most number of deals is not having a handle on your cap table before you go to raise, and sort of investors or people that think they have equity popping up. And that comes from not having a good process and managing all of your equity holders and getting on a platform like Carter or CapTable.io, something that can manage your equity, and working with legal counsel that can derail a financing, because if those kind of things pop up and investors are, not going to own what they think they own, going back to Brett's point earlier, it is a lot about ownership. And if anything comes up that jeopardizes their ownership, can really derail a deal. So just getting a handle around that, I think it's been the number one issue. And then, of course, IP issues, making sure that the company owns IP and not people and founders out there. So we don't want any IP in individual founders' names. We want it all at the company level. That's a really important part, our point as well, that we see come up a lot.
Thank you, Nicole. That cap table one is just the best. I can't tell you the number of founders that make promises to employees and even offer me shares. And I have to say, no. And if you're offering me shares, geez, I can't imagine who else you've done this to. Please stop. Shares are only offered in writing and after they've been approved by the board. Another great question for you, Brett, is tell us about the accelerator process. How can you be of importance to a pre-seed company in preparing for the next round? And thank you, Ed Rafano.
Yeah, so I think the two short answers. One is that a good accelerator will help get you ready for investor discussions. In other words, have all the stuff that one should have to have done your homework and be ready to have discussions with investors. And then the other is that a good accelerator program should help make introductions for you to targeted investors who may be relevant.
Thank you, Brett. I see another really good question, and I'll put this over to you, Eugene. How do investors in the conversation feel about multiple safes in a cap table, or said differently, coming out to do another seed round after a pre-seed round, and both are safe? And so maybe there's just a step up in the cap and valuation, or a step down. Maybe there's a difference in the discount. How do you feel about investing in a safe upon a safe? Do you care?
So we've done it multiple times. It's now becoming more of a norm. So a lot of companies are now skipping the traditional seed round, and understand because there's legal fees and doing a full traditional priced seed round. So they do safes at different price points, and then they all convert in Series A. I give you a 2-to-1 ratio. So basically, you invest $1 in the first safe, and you have to invest $2 in the second safe on the higher valuation at some of the hot companies. So we've seen many different things nowadays in that. But if you love the company and this is something that you really want to be part of, then we do those saves.
Thank you, Eugene. I'm gonna do a shout out to my friend David Rickster from M Street, who's on the call, who is the founder of a fintech who's working with state economic agencies to disrupt the current state-local ecosystem with a digital platform to improve compliance reporting and doing business with the government. And I would invite my friends here on the call to have a look at David and M Street. I'm now going to move to a question from Pankaj Parashar. Thank you, Pankaj. This is a great one. Karen, what questions would you advise one of your portfolio company entrepreneurs to ask a venture capitalist in a follow-on round?
Primarily I would focus on what will they bring to the table. First, I want to understand as an entrepreneur, what is it that will be of the most value to my company from the investors as we move forward? How can I have some diversity and variety in what they bring to the table and how they can help me to advance my goals? So those are the types of questions I would be focused on are, where will the value come?
That's so well said. I'm going to go to the next one from Shrish Hala. What does the panel think about hard tech versus software? Are you open to hardware? And I'll start with you, Eugene, because I think I know the answer.
Yeah. So we like to invest in hardware that's also tied to a SaaS model. So where, let's say, if it's we have a drone company and those drones are actually sold on a monthly subscription to the companies for industrial use. So we like the subscription to be part of the revenue if it's a hardware business.
The short answer is you're still in the hardware business. And Raymond, I know you're still in the hardware business, although you're perhaps the non-hardware guy. But can you confirm Samsung still looks at hardware?
Yes, we do. But we do advise, entrepreneurs to think about it as a more holistic way, right? Just like Samsung is a full stack. Yeah, you cannot just do pure hardware. It's very expensive, and you have to think about how to reach your customer. What's the value chain there, right? Maybe you don't have to make the hardware. Let someone else make it. Yeah.
Super helpful. Thank you. Great comment from Heidi Fung. Sorry, go ahead, Brett.
Say one quick thing, tagging on to Eugene's point. So I think one of the most interesting case studies out there right now is Peloton. That when that guy was first shopping the Peloton deal around, he couldn't get anybody to invest because it looked like an exercise bike, right? But it's turned out that the real value there was the subscription attached to the exercise bike.
Oh yeah.
Yeah. So we have a portfolio company called Fight Camp. It's exactly the same model, where it's a boxing exercise tied to a subscription that has trainers that train you.
There we go.
Yeah. It is also the user experience, right? I mean, if you sometimes you only own software or only own hardware, you don't control the total experience you can deliver to the user. Yeah.
Mm-hmm.
Heidi Fung makes a great question for everyone on the panel. Are there any conferences or places that we recommend that startups go to broaden their networks and meet each other? I think each of you, probably have your own favorite conferences, but that brings me to a bigger question is, will we ever have in-person conferences again, or are they going to remain digital?
We are.
I personally refuse to go to digital conferences for the most part. I can do an hour on this kind of a format and it can hold my attention, but I just can't do 8 hours of digital conference. And so I look forward to the day that, we're back really forming relationships at in-person conferences. And I have many favorites, Heidi, that I'm happy to share with you offline. But maybe, Karen, starting with you, if you have any thoughts on that whole question of conferences.
I think Karen had to drop off for another meeting.
Okay. Brett, well, then you're up.
I guess I stepped in that, didn't I?
Yeah, you sure did.
So let's see. This is specifically around meeting potential seed investors. Is that the question?
I think
just so. Meeting smart people, including investors.
Meeting smart people. Yeah, great. So I don't know where you're located, but certainly one of the great things about living in the Bay Area is there's an awful lot of events going on with smart people. In fact, back in the pre-COVID days, Louis would often have events and invite a bunch of people, and I always tried to go to those events, sponsored by his law firm, because I always met interesting, smart people there. And similarly, if you follow along with TechCrunch, you'll see all kinds of conferences and meetups. And in fact, meetup.com has good stuff. There's an entrepreneur night called Fuck Up Nights, where entrepreneurs get together and talk about the mistakes that they made. And those are great. Those are great events. You learn a lot from those. Learn a lot from other entrepreneurs, and you meet other entrepreneurs and meet other investors. So lots and lots of them.
Eugene, your favorite conferences, and are they digital or in person, and when are they in person?
I love in-person ones. And Web Summit already told me that they are going to actually do in-person the next one. So I'm looking forward to that. It's in Portugal, in Lisbon.
Okay.
Web Summit is an amazing conference. Amazing conference. Yeah, they said they're going to do it.
Awesome.
Yes.
Awesome. Great.
And then the other one I really like is Mobile Congress in Barcelona, which is great. CES is great, but it's huge. It's just insane. And I think they're actually doing it the next one as well in person. It's at least from what we hear. I also like putting up my own events. Louis has been to a few of those, usually small gatherings of about 10 people, kind of round table events that are great. You get to be very intimate with a lot of smart people, where it's not like 20 or 100 people that you have to try to kind of go around, but actually like you learn more about what people do, about their personalities, and about what things they love to do, and their passions and so on. So it's not just about what they do, but also what kind of people they are.
Oh, thank you. Raymond, tell me, what are your favorite conferences or not, and in person or digital?
In person, definitely. Right. I sort of love the chance to meet people, brainstorm ideas. Right. I think Eugene already mentioned a few of my favorite. Right. Mobile World Congress. I hope that there are not a lot of cancellations in June. So the next one is in about 1.5 months. Yeah. Let's see if it's going to hold. And then the meetups in different locality. And also, some of the thematic-driven conference, like, for example, blockchain, different type of blockchain events, right? In the old days, there's actually a lot of them. Pretty fun party. So we'll see how they're going to happen in the next year.
Yeah.
The events in Silicon Valley can be like full-time. Like, if you just go on like meetup.com and you're like, okay, I want in data, there's like an event every day that you can actually go to, at least pre-pandemic.
Yeah.
Well, I think you've heard people really prefer in person with events so that they can really get a chance to meet people. And you've heard some ideas. I think we're way over time, so I'm going to give people just a chance to wrap up with any thoughts or ideas that they haven't yet had a chance to make yet. Raymond, I'll start with you. I really appreciate you coming on and sharing with us the transformation of Samsung Next and what you're looking for. Any final thoughts for the audience about high resolution seed stage financing?
Yeah, I would say it's a great time to raise. The big advantage to the entrepreneurs. But focus on the problem you are solving. If you can understand the problem better than anyone else, and the investor will be excited.
Thank you, Raymond. Eugene, your turn.
I think that currently the market is in the condition where if you are thinking of raising, you should raise now because the future conditions are right now unknown. But also when you're building products, think about what problem you're trying to solve, and is there actually a problem? Because sometimes we see entrepreneurs that are creating a product and then trying to find a market for it, which is not the best way of doing it. And never stop dreaming. I mean, that's kind of, I think, the main thing in this, and never give up.
Oh, thank you so much. Brett, final parting shots.
Yeah, well, it's hard to beat what Eugene just said, but I think what I would say is that it's a great time to be an entrepreneur right now. I think 2021 is the greatest time in the history of the world to be an entrepreneur. And there are more sources and structures of capital available today than at any other time in history. So, get out there and do it, make it happen. This is the right time.
I'm feeling the waves of optimism, positivity, and creativity from everyone on this call. Thank you so much to our panelists and to my partner, Nicole Hatcher, and the greater Foley Lardner team here in Silicon Valley for producing. And we will circulate a copy of the materials and a link to a playback for those of you who'd like to share. And feel free to reach out to anybody on the panel. I think you've heard that everyone is very open and excited to hear from new companies at all stages of growth. So thanks, everyone. Have a great rest of your week, and onwards and forwards.
Thanks, Louis. It's a pleasure.
Thanks, Louis.
Thanks, Louis.